80,000 jobs certainly was a disappointment. 80,000 jobs were reportedly created in June, far different than the ADP number, which was the estimate that came in yesterday for private sector jobs at 176,000. So 80,000 is not very good. There was a total of 84,000 private sector jobs officially, where 4,000 government jobs disappeared, which was a pretty low number. Government jobs disappearing in recent times. 80, that is not nearly enough even to put to work the college graduates. We need like 100,000 jobs a month for new people coming into the labor market, let alone bringing down the unemployment rate. So that was a pretty big disappointment this morning, and the market's reflecting that. During the week, we had not very good news from the European PMI, 17-nation European EU, to 45.1. Remember, above 50 is expanding, below 50 is contraction. Our PMI manufacturing was 47 something too, so ours was down. Our service sector, which is 4/5 of our economy, 4/5, and the manufacturing sector 1/5, was up to 52, above 50, expanding again. So that wasn't as bad, but still the trend has been down. The trend is down. It's reflecting the jobs report that the trend is down. I think what we're seeing is, we're catching the cold from Europe and a slowdown from China and other parts of Asia. Even though they're growing pretty fast, they've slowed down, and that's affecting us, our exports, different sectors of us. There are parts of our economy that are doing pretty good, but not that good. Oil has been down low, so that's a benefit at some point. We're going to have that to add to people's spending. Retail sales are down, mostly because oil prices were low, and that reduces retail sales. But even that, the trend is a little bit down. There wasn't a lot of great news that came out this week as far as our economy, and that has me thinking that maybe we're going to get our QE3 faster than we thought. The Fed extended Operation Twist till the end of the year. The Fed doesn't want to be seen as influencing the elections, and QE3 definitely would be probably seen as influencing the elections, but we need it. Looks like we need it to me. So we may get QE3, but it won't be till later in the summer, if at all. It might be postponed to the end of the year or closer to the election. So the Fed can't be accused of influencing the election. What we also need the fiscal cliff problem to disappear, and that means you got to have the Republicans and the Democrats agree to maybe pushing back that fiscal cliff till after the election, so you won't have such gridlock as we have now. You got, the Republicans and Democratic presidential elections bitterly fighting each other and blaming each other, and therefore nothing's getting done. And usually I would prefer nothing being done from Washington, really, if you want to know the truth, because when they do nothing, the economy then tends to do what it needs to do. But, the stuff that they've done before is now affecting us. It would be nice if they'd undo that. One of the things they've done is postpone the Bush tax cuts to expire till just before the election. Does that make sense? No. Things that they do. Anyways, what we're seeing is soft patch in the economy. I think that for the stock market, that's not necessarily a bad thing, because economies around the world are all lowering interest rates, trying to boost growth. We're trying to boost growth, and at some point that's going to work, and the stock market is going to start rallying before you see it. So I have a feeling we're going to see a low in the stock market this summer, and I've been saying that for a while. You want to be a little defensive, which we are. We're defensive. But on that next low movement in the stock market, which will come in July or August, could be September, but probably July and August, that's when you're going to be wanting to start to get aggressive, I think, when that happens. Because too many economies are seeing a slowdown in their economy. Too many countries are seeing a slowdown in their economy, and they're doing something about it. Even Europe is starting to do something about sparking growth rather than just focusing on austerity. They need austerity, but that's all they've been focused on, except for now. Now that they're talking about, well, what can we do to spur growth? And at some point, that will probably work. I don't know if it's a long-term solution, but it will probably work. We will get a bump up in our GDP. But by the time you see it, as I said, by the time you see it in the news and it's in it, the stock market will already have moved and it'll be too late. So you've got to be ready to pounce into the stock market when we're at a low.
The Invest Talk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's Invest Talk talking points, plus news of upcoming Invest Talk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.